In this video, we're talking about the future of ICOs, or initial coin offerings, and how tokenized crowd sales are going to change the world. Maybe. So welcome back to Chris Dunn TV, the show that's all about helping you develop skills to thrive in today's economy. And here's what we're going to cover. We're going to talk about some initial coin offering basics, what it is, how it works, but we're also going to dive into a lot of the rewards and the risks that are associated with this new way of raising capital for business. And we'll also talk about how to find good investments and also how to avoid scams. And I'm also going to give you my opinion about the future of ICOs and some predictions. And look, I'm coming at this from a individual investor's perspective. I'm not a coder. I'm not running a massive hedge fund or managing anybody else's money for that matter. But I'm going to show you from my perspective as both a trader and an investor how I'm doing this and also what I think the future of this space is going to look like. So before we dive in, just a couple of disclaimers. I am not an investment advisor. I'm not an attorney or a CPA. I'm just an investor. I manage my own money, and trading and investing in crypto assets is extremely risky, and you can lose all of your capital, which is why I like to say only invest money that you have put aside that you can afford to lose. Don't invest or trade with capital that you need to buy groceries or pay your rent or your mortgage. Now, before we talk about ICOs specifically, let's talk about the traditional ways that people have used to raise capital for their businesses. The first and easiest is bootstrapping, basically taking your own capital and investing it in your own business. From there, you have friends, family, and fools, basically people that you know on a personal level that are willing to take a risk and give you money for your business. From there, you have debt, right? It could be credit card debt. It could be a small business loan, whatever. From there, you go to angels, angel investors, or VCs, venture capitalists. Basically, angels are individuals, like me, I've done this several times, that invest in businesses. They take their own capital and invest it in businesses. Venture capitalists are companies or firms that pool together a bunch of investors' money, and then the general partner of the VC firm decides where that money gets invested. From there, you have an IPO, or an initial public offering. This is a very serious, very big deal, lots of regulation, costs millions of dollars to do this. This is where you actually take your company from being a private company to going public, right? Anytime you hear somebody say, oh, we're taking our company public, that means they're going on the stock exchange, like the New York Stock Exchange or the NASDAQ or something like that. And then from there, we have crowdfunding. Now, this is a relatively new form of raising funds for your business, and ICOs, or initial coin offerings, are basically a type of crowdfunding. And these are also called token sales or crowd sales, and it's again, it's a new form of crowdfunding. So you are funding your business from hundreds or thousands of people from either your country or around the globe. And what makes this different from older forms of crowdfunding is crowdfunding with ICOs is typically done via cryptocurrencies. You're basically accepting or raising coins like primarily either Bitcoin or Ethereum to fund your business. And then the funds are supposed to be used by developers to create and launch whatever proposed project they've put out there. In 2017, ICO funding has actually outpaced traditional VC funding. ICOs have raised over $2 billion in funding, right? So this is outside of the traditional venture capital way of raising money, which is a really big deal. And so what this has done is it's actually attracted the attention of big venture capitalists and business incubators from like Silicon Valley. Now, let's talk about some of the risks and rewards around ICOs, and we'll start by talking about some of the benefits. The biggest benefit that I see with ICOs is it literally opens you up to a global investor base. Before, let's say you were running a startup here in the US and you were looking to raise a seed round or an A round, and you were in Silicon Valley. odds are most, if not all, of your investors would be in Silicon Valley, or at least in that kind of small network of people. With an ICO, you can raise money from people all over the globe. You can have somebody in India or Burma investing in a startup that's based out of Switzerland that has team members in North America, South America, Africa. Like it's really crazy. It's really incredible what this has opened up. And it also gives you the ability to raise a lot of capital very quickly. You know, we've seen about a half a dozen or so ICOs this year alone that have raised over $100 million each. It's really impressive. There's also a very low barrier to entry. And we'll talk about the legalities of this in a second. And again, I'm not an attorney, but I'm going to give you my opinion on where I think this is headed. And there's also big potential upside for investors. You know, a lot of people have made significant amount of money over the past couple of years through ICOs, but that also leads us to our risks. When it comes to the biggest risks of ICOs, the biggest risk that I've seen is a lot of these ICOs really don't have a real product or a proven business model yet. In a lot of cases, it's somebody with an idea who throws up a website and writes a quick white paper and tries to get rich quickly or raise a ton of money in a short period of time just based on an idea, right? And there's a lot of people that are buying into these ICOs purely as get-rich-quick speculators. They think, okay, I'm really not in this for the investment. I just want to put some tokens in, and then when this project launches and hits the exchanges a month after the ICO is done, hopefully I'm going to turn $10,000 into $1 million, right? That's just the mentality that I see right now. And so it's kind of right now we have this double-edged sword, okay? Because the biggest, or one of the biggest kind of benefits to doing an ICO versus raising capital the old way is that the time frame from the initial seed round to liquidity is very short. Okay, let me explain what that means. So after you do an ICO, and an ICO might last a few days, a couple of weeks, or maybe a month or so, that's just the time period that you're raising money. You're saying, hey guys, my ICO is open. You can send money this way, right? Now, when that closes and you have that capital, there is a very short period of time that you could actually get your money back out of that. That's when that ICO or that coin gets listed, that crypto asset gets listed on an exchange like Bittrex or Poloniex or Bitfinex or, you know, one of those crypto online exchanges where you can buy and sell these tokens. This is dramatically different than the legacy way, the old school way of doing, say, a seed round or an A round with traditional angel investors or venture capitalists. I know that whenever I've made an investment in a startup, say here in Austin, Texas, I'm not going to be able to have liquidity or get my money back out for probably 5 to 7 years on average, where with an ICO, you can invest say on the first of the month, and within 30 or 45 days, you might make 5 or 10x on your money. At least that's what this year has been like. It's just been insane. And I don't expect that to be the case forever, but that's why we have such a gold rush right now in the ICO space. So to find a good investment, what I look for is, does the business model offer a product or a service that actually solves a real problem? You know, it sounds like blatantly obvious, but you would be surprised at how many of these ICOs that are coming out really don't have a viable product or a real service. It's really just fluff. The second thing that I look for is the team, right? Does the team have the skills to execute this? It's even better if they have a proven track record, if they're an entrepreneur that has had an exit before, meaning they built a company and sold it and made their prior investors a lot of money. And the third thing is there a strong community behind the project, and are there other smart investors involved? If I can't answer a definitive yes to all three of those, odds are I'm not investing in that ICO. So that leads us to the next thing. Well, how do you avoid all of these scams that are out there? Well, the first thing, and my biggest red flag, is if I see people talking about guaranteed returns, either setting a floor price for their ICO or just talking about insane goals that I'm like, there's no way that that person or that team is going to be able to achieve that. Also, has there been any actual development on this project, or is it just an idea? Is it vaporware? Is there really nothing there, right? Think about like the show Shark Tank, right? A lot of the investors on Shark Tank want to see an entrepreneur that actually has traction. That's why the biggest thing is whenever you see somebody walk in with an insane valuation and they're asking for, say, $1 million for 5 or 10% of their company, instantly all the investors are like, oh my God, you better have a lot of sales, right? If you're asking for a big raise, you really better have some traction or at least a real product or some kind of something to show, not just an idea. Also, another big red flag is if the developers are anonymous, right? Like, think about that. Are you really going to invest in a company that you don't know who the development team is? Right? Also, the final thing, and there's a ton of these coming out right now, if it looks like a pyramid scheme or an MLM or a Ponzi scheme, if it smells like one, if there's any language of you can make 1% a day, or any kind of guaranteed return type language or lingo, or talking about downlines or split lines or any kind of talk that sounds like a pyramid scheme, guys, it's a pyramid scheme. So let's talk about how I actually invest in startups. And it doesn't matter if I'm writing a check to a traditional startup or if it's an ICO, right? I look at them kind of as the same. The only difference is the way that they're raising capital, right? But they're both companies that should either produce a profit in the future or now, or have a buyout opportunity where somebody like Google is going to buy them, right? And the first thing I want to say here is there's a big difference between investing and trading or speculating, right? Those two are dramatically different. And when it comes to investing, right, anytime that I am cutting a check or sending coins to an entrepreneur, I assume that that money is gone forever. Why do I think that way? It's not that I hope to lose money, but the reality is that 90% of startups or more eventually go bust. They fail, right? And kind of the mentality in the angel investing or venture capital world is your winners are going to make up for all of your losers, right? If you invest in in Facebook early or Twitter early, that's going to make up for the other 90% of startups that fail, right? And then some, right? That's the idea. And I know investors that have had 1 or 2 investments and they've both succeeded and they've had exits and they made money on 100% of their initial investments. And I've talked to other investors that have been in the game for 20 or 30 years and have a portfolio of dozens of investments and have never had a successful exit, right? That's how risky this can really be. And I only invest, right? Meaning if I'm going to invest for future production, I believe in a company long-term, I only invest in projects that I see the potential for at least a 10x return. Meaning if I cut a check for $25,000 or $50,000, I want to see at least $250,000 to $500,000 potential return, right? If it's a business that's either just too small or doesn't seem like it has a big enough potential customer base or project size, it's just not worth the investment for me. And I also only invest in projects that already have traction. I just don't invest in ideas. Ideas are a dime a dozen nowadays, right? It's all about execution. And, for example, there were several people that tried to do the Uber model, right? That tried to do the ride sharing model before Uber. Uber just happened to execute on it properly. Now, trading or speculating is when a coin actually hits the exchange and you have price action where you can buy and sell the momentum or the hype. That to me is completely different than investing, and I actually do both. So the big question that is on a lot of people's minds right now is, how can you allow the little guy, aka a non-accredited investor, and we'll define that term in a second, but how can you allow a smaller investor to participate in ICOs or seed rounds or crowdfunding and other ways to fund early stage businesses? How can you allow a smaller investor to participate in that? Because that's where the opportunity is, right? That's where the biggest returns can be. But at the same time, how can you allow that to happen while protecting them from getting scammed, right? And then the question is whose role is it really to protect people? Is it government regulators? Is it self-regulation through education? Is it, non-government associations that try to self-regulate? And we're starting to see that in the crypto space. But this is where you have governments that are going to start to split dramatically. You're going to have some governments that are like, we don't care about the small investor. Screw that. We just want as much control over everything that we can. We've seen that with China. We've seen that this week with Russia, right? And I said this in my last video, and I'm going to say it again because I think it's so important. Governments that try to either ban or severely restrict cryptocurrencies might feel like they have more control in the short term, but all they're doing is stealing prosperity from their citizens in the long term. So that's why I think this question is so important. How do you let the smaller investor participate in the stuff that has made Wall Street and Silicon Valley investors wealthy over the past decade through the biggest bull market that we've seen in recent history? So to help try to answer that question of how do we let the smaller investor participate in the biggest opportunity, I want to take a look at some legislation that's already been passed here in the US, define a couple of terms, and also look at some proposed solutions for ICO fundraising. So in the United States, startups have been able to advertise for their fundraising rounds, but they've only been able to accept accredited investors. Now, an accredited investor is basically a millionaire. You need a net worth of $1 million or a minimum of, I think, $200,000 or $300,000 a year in income. And that represents about 2% of the US, which is severely restrictive. And I think that that has been pretty unfair. I think that it's just given the power to a small amount of people while leaving the mass majority out. Now, with the Jobs Act, we've seen legislation come out that's tried to help with that, but in my opinion, it hasn't done a great job. Startups have been allowed to take on non-accredited investors, but the restrictions are so high and the hoops that they have to jump through are so big that for a lot of companies, it's just not worth it. They say, you know what, instead of going through all that just to accept non-accredited, let's just see if we can close this round with accredited investors. So in an attempt to kind of self-regulate the ICO space, a group of people have come up with something called SAFT, Simple Agreement for Future Tokens. And this kind of closely mimics another program that was put in place by, I believe, Y Combinator out in California, which is a big business incubator and accelerator. And what it does is it gives a little bit of a framework to ICOs, and it still requires ICO investors to verify their accredited status. And if you go to saftproject.com, you can read what this is all about, read the white paper and see what this is attempting to do. And I think it's a good step in the right direction, but it still limits non-accredited investors from investing in ICOs that choose to follow this model. But the good news about the SAFT project is that it's proven to work, and it actually worked really well. If we look here on coinschedule.com, the number one ICO, the top ICO by total raised, was Filecoin, that recently raised over $250 million, and they did that by following the SAFT guidelines. And what they did is they actually launched on a website called coinlist.co. This is very similar to AngelList, which is basically a place where angel investors can find good opportunities in the startup space. So Filecoin was, I believe, the first token to actually go through CoinList, which what they do is they verify the accredited status of investors. And I didn't participate in this one, actually. I just wanted to watch the first one and see how it went, but it does look like it was successful. Now, ICOs do not have to follow that model. There's actually 3 models for ICOs, as far as I can tell, kind of 3 main options. The first one is you follow SAFT. If you launch an ICO, you only accept accredited investors, at least today. And hopefully what that's going to do is give you an opportunity to raise from venture capitalists and big angel investors in Silicon Valley or here in the US. Now, another option that a lot of ICOs have started to do is they say, you know what? We're not dealing with that. We're just going to altogether exclude US investors. And I can see why certain people would want to do that. And what I think is going to happen is we're going to see a big split between projects that either fully abide by that and they want to go that route, or they're like, you know what? We're going to go to number 3, which is we're going to allow any and all investors and then fight whatever governments come at us. So far we've talked about what ICOs are and why there's been such explosive growth this year. And the good news is I think we're just getting started. And here's a couple of predictions. The first one is I think we're going to start to see big venture capitalists that are going to favor the ICO model, meaning the raising money through crypto tokens model over traditional fundraising. It's faster, it's cheaper, and it can potentially give you availability to a bigger investor base. Also, here's what I'm starting to notice happening. And not a lot of people have started talking about this a whole lot yet, but this is where I think things are headed. Stock market investors, meaning people that have traditionally not invested in startups, but have just invested in public companies like Walmart and Amazon and Google and Apple, right? Like public companies like that. They're going to start seeking, they've already started seeking investments outside of IPOs and listed stocks. Why is that? Well, the volatility, even though we're at all-time highs in the stock market right now, the volatility of the stock market is at record lows, and it's been dropping year over year for the past several years. That's why I don't trade the stock market anymore. Cryptocurrencies are just so much more volatile, and there's so much more new money here, and it's so much more profitable in my opinion and in my experience. But here's what's going to happen is you have a lot of investors, everybody from individual investors to big hedge funds that are traditionally invested in the public stock market. They're looking for alpha. They're looking for profits above these boring returns that they've been getting for a while. And with volatility shrinking, a lot of high frequency firms have been struggling. A lot of just big firms aren't seeing the returns they want. That's why Goldman the other day said they were going to start trading Bitcoin, right? They know that's where the opportunity is. And I've been talking about this for like 5 years now, that this was coming. Well, guys, it's here, right? Stock market investors are going to start looking at new ways of investing in markets outside of the boring and underperforming IPOs. Now, I think we're also going to see most of the big ICOs, meaning the ICOs that raise hundreds of millions of dollars, I think are going to start to gravitate towards launching through platforms like CoinList and only accepting accredited investors unless we find a way to answer that big question in a much better way. Also, I think a lot of scams in the space are going to start to get shut down. And I think a lot of the projects that have raised a lot of money that really don't have a real product are going to start failing over the next few months to 1 to 2 years. And I think a lot of people are going to lose a lot of money. And as a crypto community, we need to do the best we can to educate. That's why I do these videos, to help educate investors and also try to self-regulate so these scams don't flourish. Because the more scams there are and the more people lose money, the harder governments around the world are going to crack down on ICOs, which could stifle innovation. And then my big hope, and I'm using this as a prediction, but it's a hope, is I want to see smaller investors, non-accredited by US guidelines, get access to better deal flow, right? For example, imagine if you could have invested in Facebook or Twitter or Uber prior to going public, right? Imagine if you got in on that A round in Uber or a lot of these early projects before they hit the public markets, right? You're going to be able to get into stuff at $10 million valuations compared to $50 or $100 billion valuations, right? That's where you make your money, investing early when the company's value is much, much lower. And then when it hits the bigger base, that's where you end up buying at the high, right? That's why I like the early investors, and the rich get richer and the poor get poorer, right? I want to help that change, right? So how do we do that? I think it's going to be through education and self-regulation. And that leads us to the big question of the day, which is, what do you think is the best plan of action to secure a successful future for ICOs? Is it some sort of regulation? Is it a free market approach? Is it education, right? What do you think is the best way to help smaller investors around the world participate in big projects that they believe in the smart way? And I'll leave you with this. This is the coolest ICO that I've seen this year. One of our community members at the Skill Incubator sent me this picture. He said he helped his kids with their first initial cup offering, literally a lemonade stand that accepts Bitcoin. And even though that's kind of funny because of the fees that we have in Bitcoin transactions right now, this is the future. This is the reason I do these videos, guys, is the young entrepreneurs and investors of the world that are going to have world-changing ideas, and I want people that have good intentions and that have a knowledge of how to actually invest have that opportunity and be able to do it the right way. So give this video a thumbs up if you got value from it. Share it with anybody that you think could get value from it. And again, leave me a comment with the answer to that question. What do you think is the best way to secure a successful future for ICOs? Basically a decentralized way for people to raise money for their business around the globe without a bunch of red tape and BS. I'll see you guys next time. Take care.